What's up, future investors? It's your boy Josh Carter, and you're locked into the channel where we don't just talk about money, we multiply it. Now, most people think real estate investing means buying a house, flipping it, or maybe renting out an apartment. But there's a whole other side of real estate most people never talk about. And that's exactly what we're breaking down today. Before I do that, subscribe to this channel and hit that like button so more people can find us. Now, in this video, we're diving into alternative real estate investments, the niche markets like 1. Medical buildings, 2. Senior living communities, 3. Student housing. These are the under-the-radar areas of real estate that can lead to big returns if you play it smart. Let's go. Part 1. Why niche real estate matters. Most real estate investors all rush to the same thing: houses, apartments, vacation rentals. But guess what? When everyone runs in one direction, smart investors look the other way. That's why niche markets are so powerful. They're A. Less competitive, B. Often more stable, C. Backed by strong long-term trends. You're not fighting over who gets to flip the same 3-bedroom house. Instead, you're tapping into spaces where demand is growing fast, but most people aren't paying attention. Part 2. Medical real estate. The doctor will see you now. Let's start with the medical real estate. Think about it. People will always need healthcare. A. Checkups, B. Therapy, C. Surgeries, D. Labs, E. Physical rehab, and every one of those services needs a building to operate. That's where medical real estate comes in. This includes A. Clinics, B. Dental offices, C. Surgery centers, D. Urgent care centers, E. Outpatient treatment facilities. Why it's a smart investment. 1. Long-term leases. Doctors and health clinics don't move around much. When they find a good spot, they stay put, often signing 5, 10, or even 20-year leases. 2. Low vacancy rates. Because healthcare is essential, demand for these buildings stays strong even in a bad economy. 3. Stable tenants. Medical tenants are usually well-funded and have steady income from insurance payments. Real example: imagine you buy a small building and lease it to a local eye doctor. Not only will the rent be higher than a house, but the tenant is more likely to stick around for years without you having to fix a leaky sink every week. That's what I call smart money. Part 3. Senior housing. The silver tsunami. Next up is senior housing. Let's talk numbers. In the US, 10,000 people turn 65 every single day, and by 2030, 1 in 5 Americans will be a senior. This is called the silver tsunami, a wave of aging people who need housing, healthcare, and support. And this wave is bringing massive opportunities for investors. Types of senior living facilities. 1. Independent living, for active seniors who just want a safe, community-style home. 2. Assisted living, for seniors who need help with things like cooking or medications. 3. Memory care, for seniors with dementia or Alzheimer's. 4. Skilled nursing, for seniors who need 24/7 medical care. Why it's a great investment. 1. High demand, the population is aging fast and we don't have enough facilities. 2. Premium rents, families will pay well for high quality care. 3. Loyal residents, once seniors move in, they often stay for several years. Challenges: it's not as hands-off as a rental home. Running a senior facility takes experience or a good management team, but if you partner with a good operator, you can be the investor while someone else handles the day-to-day. Investment option: you can also invest in senior housing REITs, real estate investment trusts, so you get a piece of the action without buying a building yourself. Part 4. Student housing. Earning while they learn. Let's move on to something with younger energy: student housing. College students need a place to live and universities often can't house them all. That creates a huge opportunity for private investors. What is student housing? It's real estate built or rented out specifically for college students. 1. Off-campus apartments. 2. Shared houses. 3. Dorm-style complexes. If you have ever been to a college town, you know students are always looking for places to live and they often pay a premium for spots close to campus. Why it works. 1. Consistent demand. Every year there's a new wave of students and many schools can't keep up with housing needs. 2. Pre-leasing. Students usually lock in their housing months in advance, which means you collect rent early. 3. Parental guarantees. In most cases, parents co-sign the lease so rent gets paid on time. 4. High cash flow. You can charge per room instead of per unit. For example, a 4-bedroom house near campus could earn 4 separate rents. What to watch out for: 1. More wear and tear. Let's be honest, students aren't gentle. 2. More management. Turnovers happen every year. 3. Local laws. Some cities have limits on student rentals. Still, with the right property and systems, student housing can be a goldmine. Part 5. Comparing the 3 niches. Let's put it all side by side so you can see the big picture. 1. Medical. Pros are long leases, stable tenants, recession resistant. Challenges are higher upfront costs, needs specialized properties. 2. Senior housing. Pros are huge demand, premium rents, demographic growth. Challenges are needs experienced operators, more regulations. 3. Student housing. Pros are high cash flow, consistent renters, and pre-leased. Challenges are turnover, maintenance, city rules. Each one has its own vibe. Medical is steady and slow. Senior housing is booming and people focused. Student housing is fast paced and high turnover, but with big upside. The key is knowing your style as an investor. Part 6. How to get started in niche real estate. Alright, let's say you're interested. How do you actually get in the game? 1. Start small with REITs. If you're not ready to buy a building, invest in a REIT. That's a real estate investment trust. It's like a mutual fund for real estate. There are REITs focused on A. Medical offices, B. Senior housing, C. Student apartments. You can buy in with as little as $100 through platforms like Fundrise or Realty Mogul. 2. Partner with experts. If you've got money but not the experience, partner with people who do. Look for developers or managers who specialize in niche markets. You provide the capital, they run the deal, and you both win. 3. Research local markets. Not every city is right for every niche. For example, A. A town with a huge university, great for student housing. B. An area with an aging population, perfect for senior living. C. A growing suburb with new hospitals, prime for medical offices. Study local trends, zoning laws, and competition. 4. Run the numbers, always do your math. A. What's the cap rate return on the property? B. What's your cash flow after expenses? C. What's the exit plan if things don't go as planned? Just because it's a niche doesn't mean it's a guaranteed win. So be smart and thorough. Alright, let's wrap this up. The truth is, real estate is more than just houses and apartments. Some of the best opportunities are hiding in plain sight in niche markets like A. Medical buildings, B. Senior living communities, C. Student housing. These alternative investments might take a little more learning, a little more strategy, but the rewards can be worth it. So if you're serious about building wealth, don't follow the crowd. Look where others aren't looking. Think smarter, go deeper, build wealth your way. If you learned something new today, smash that like button, hit subscribe, and drop a comment below. Which niche market are you most interested in? And remember, I'm Josh Carter. And around here, we don't just talk about making money. We talk about making money work for you. Peace.